Hey, good morning, UPBOptionMillionaires.com. It's Thursday, October 30th, 2014. Halloween is tomorrow, and stock futures are scared. Here we're down almost 0.4%. We had a nice move up yesterday at the open. We pulled back into the Federal Reserve announcement. We had a nice rally into the close. But then the European market opened for trade, and we've been tumbling ever since. Crude oil is pulling back. If you look from a long-term standpoint here on the S&P 500 futures, it's kind of an unorthodox head and shoulders pattern. Okay, the shoulder was broken, or the neckline, was broken as we plunged to lows 2 weeks ago, and then we rallied. But look where the rally stopped. The rally stopped exactly at the left shoulder here, and we're pulling back. If we plunge below this neckline, we could be looking at lows of earlier this year. So it's something to keep an eye on. And if you look here, I'm going to bring up some charts real briefly, and I'm going to do another video on some earnings that we have coming up. Look at the, we'll start Facebook, which has a nasty candle to the downside. I think supports it. 70 here, and I'm bringing it up in my video recently. But the S&P 500, the Abenomics trend line that started back in November 2012. I've been talking about this for months and months and months and months on end. Each time we hit this line, we bounced until recently where we fell below it. And if you told me down here at the lows that we saw 2 weeks ago, we were going to come back to kiss this Abenomics trend line, or we like we did yesterday, watch this. I mean, amazing. We came right back above it. Let's go a little closer. There we go. Yesterday we came right up above it before coming down again. So we got all the way back to it. It's pretty amazing, in my view, my opinion. That's not a funny laugh. And then if you look, just before the close, we came up and we gave that this is a trend line that I drew, I don't know, a year and a half ago. We came right up to it and we kissed it. We gave it a kiss. I don't know if that's one last kiss goodbye. It's like, goodbye, honey. I might not see you again. But it's been swell, and it has been swell. It's been an amazing bull market. I've been talking about this in the chat room at Option Millionaires for a long time. I mean, the reason stocks are rising is nowhere else to put your money. There isn't, and we've saw it since the lows here that we hit 2 weeks ago. The buying was reminiscent of the buying that we saw over the last 5 years. Every single dip. Every time the market pulled back a little bit, it just raised higher. It was like magic. So this is an important, if you look, this point in time here where we are, this is very important from a chart perspective. If we get back over this is great. One thing I want to keep an eye on here is from the short-term perspective. I think there's a chance we could pull back to, we pull back to about the 193 level. We pull down here. We could be putting in some sort of inverted head and shoulders pattern. And we know from the last 5+ years of rabid market buying that any kind of bullish chart pattern seems to work a lot better than any kind of bearish chart pattern. So we can look at this head and shoulders pattern, but what we could be really looking at is if we pull back here down to this level is an inverted head and shoulders pattern and new record highs. So we're certainly at a very interesting point in this marketplace. We're up at the Abenomics trend line. We can muster our way above it, and it's just going to be, we could be heading towards new record high stock prices as long as we stay above it. But let's look at some other ETF stocks and tickers here real quick. Tesla, which has been moving all over the place. We had a decline on sales, and we have Elon Musk coming out saying, no, you're wrong. We came all the way almost up to this trend line. We're pulling back here. You know what? I've been very bullish on Tesla for quite a while. I do think it's heading over $300, but right now the trend line's containing it. We could see 200 before we see 300. So that's something to keep an eye on. Twitter, same thing here. I think 37.50 is support. We gapped down from earnings. I think we see 37.50, even though it's going to be a $100 stock in the next, 6 to 9 months. IWM, the small caps, still looking good here. We're in the middle. We're right in the middle of this beautiful long-term trend line. That goes back longer than this. There we go. If you look, to me, still looks bullish. As long as we're above this 107 trend support line, this is bullish here for the small caps. QQQ, which bounced right off of the support that I drew out for it many moons ago. Looking good here. I mean, we're just off that $100 figure. So something to keep an eye on as well. We had a beautiful bounce. I don't see that same like we see with the S&P 500 futures. I don't see that same head and shoulders topping pattern. We would have stopped at about the 96 level here. We just kept going. So that's something to keep an eye on. Caterpillar, same thing as IWM. We're in the channel. We got back over 100. We just fell briefly below it. Gold, which has been pulling back, it's down with another 1% this morning. This trend line here, which was the former channel tops resistance line, is now acting as support, so about 112.50. The financials have been doing wonderfully. JP Morgan Chase back in the channel. Look at this channel. I drew this channel again many moons ago, and look at this. We bounced right off of support here. We're almost at 60. Goldman Sachs, which is just off of not record highs, I shouldn't say, but recent highs, what, about a 190, held support here at this trend line, so that's looking pretty good. A couple other VXX. Obviously, we've seen this chart before. Just keeps getting mauled, and you see it over the 9 months. We have these pops that happen, and they just get sold off. So we're actually heading back to lows. Those are the things you got to watch for because, volatility. When investors are getting into stocks, they're selling volatility. And let's look at, let's do one more chart. Apple, which broke out to new record highs yesterday. Look at this chart. I brought this up back in May of 2013 at the lows. We have this beautiful W bottom. I was also saying, if you look from the long-term chart perspective, we're in the next leg higher for Apple. 1, 2, 3. And there we go. We're breaking out to record highs here. This could be 130, 140 in the next 6 to 9 months. All right, UPBOptionMillionaires.com. Going to do an earnings video. I'll see you in the chat room at OptionMillionaires.com. Here's the bonus chart. This is the bonus chart. This is a chart that I think is ready to break down. Back at the start of January, the start of the year in January, I talked about the stock as being oversold and set for a big reversal. And now I am saying it's set for a big decline. It's big. Big lots, which is, and if you look back over the last 5 years, at the end of the year, look at this candle down we saw in 2012. That was the middle of the year, but for the most part, and look at this back at the end of last year, big lots falls at the end of the year. Here we are. Almost looks like a broadening top. We have a megaphone topping pattern here. But if you want to look in even closer, I see a head and shoulders pattern here. Head and shoulders. If I look back a little bit further, there you go. Left shoulder, head, right shoulder. And I'm looking for a move under 40 in the next couple weeks, and then ultimately down back to the under 30 level, which is a pretty wild call because back last year, not last year, at the start of this year, I was calling for a move higher. And we got that move higher from about $27.50 up to $47.50, $20 move on a $27 stock, not bad. All right, UPB, that's the bonus chart. I'm in some big lots puts, 42.50s for this month, and I'm looking to move them out to December. Goodbye.